Hello, good evening. Welcome back to the YouTube channel of the 24H Traders. And now we will continue our discussion about the multiple how to trade the 24H Traders way. And now we have opened the second things that you need to understand is about the multiple time frame analysis. So we will walk through it one at a time. So again, multiple time frame analysis. Everyone knows about the importance of multiple time frame analysis in trading. So in trading, we have the monthly time frame, the weekly time frame, the daily time frame, then the lower time frame, the 8-hour time frame, 1 hour time frame, 30-minute time frame, 15-minute time frame, 5-minute time frame, and 1 minute time frame. So it's that's the time frames that we can use on the MT4 or MT5. So one thing that you need to understand about the multiple time frame analysis is that each candles or the charts look similar in each time frame. They look similar, but this is for beginners. I will explain it slowly. So we are right now on the monthly time frame. So we are right now on the monthly time frame. It means that one candle, one single candle is 1 month period. So it's within 1 month period. One single candle is 1 month period. So this is 1 month. This one another 1 month. This one is also 1 month. So it's 1 month period on the monthly time frame. If we move to the weekly time frame, then one candle is 1 week. If we move to a weekly time frame, I'll put it W1 weekly time frame, then the one candle is 1 week period. On daily time frame, so one candle is the 1 week period. So we will move back to the monthly time frame. We will discuss it how I analyze the multiple time frame analysis. So if you see that on each time frame, the candlestick charts actually it looks similar. And one thing that you need to understand in multiple time frame analysis is that uh, the rules of each chart works on all time frames, on every time frame. So if you trade on the 5-minute time frame, lower time frame, if you are day trading, if you are day traders, you want to trade within a day in a lower time frame, let's say 5-minute time frame, the rules are exactly the same. The chart, the market behaviors, the candlestick chart patterns, the rules are the same. They are applicable on all time frames. It is the schematic that you need to understand, the higher time frame schematic that you need to understand. For example, I'm using the rules of 30. Shout out to the Mantafix. I learned it from him. uh, he's a good trader. You can search Mantafix for his YouTube videos also if you would like to learn about the rules of 30. I use his rules of 30. I learned a lot from him, but uh, I use his theory to learn myself, to learn to understand the candlesticks myself, to learn my trading style. So until I found my trading style right now. So basically, I use the rules of 30. I use the monthly time frame, and then I use the daily time frame and the 1 hour time frame for my uh, trading techniques and skills. So yes, for my analysis, I use the monthly time frame. For the multiple time frame analysis, I use the monthly time frame, daily time frame, and 1 hour time frame. It's basically the understanding of 1 month uh, has 30 days. So I skip the weekly time frame, so I use the 1 month time frame, and then I analyze the 1 month time frame. Then I use it, and then I analyze the daily time frame. And then for the daily time frame is actually the crucial part, because I trade mostly on the 1 hour time frame. I trade mostly on the 1 hour time frame. So I use the final analysis is on the daily time frame, and then I trade based on the 1 hour chart. And if you'd like to use the 5 minutes or 1 minute time frame, you can also use the same pattern from the monthly time frame to daily time frame, then the 1 hour time frame, and then straight to the 5 minute time frame or 1 minute time frame. So it's very important to understand, if you trade on the 5 minute or 1 minute time frame, it is very important for you to have the final analysis on the 1 hour time frame, so that you can position yourself at the right side of the market. So this is I'll give you the example, because on my manual analysis, I use mostly the Wyckoff schematic. So if we are right now on the monthly time frame, I use the Wyckoff schematic. So if you see on the monthly time frame, I don't think you can see it. The monthly time frame, the schematic, you can open it on your MT4. This is on gold, the monthly time frame, and the market is actually starting to create a bearish trend on the monthly time frame. And what I do is I mark the support and resistance area. I always use the black lines to mark the support and resistance area, and I use it to mark uh, the close of the candle. So I don't use the wick for the support and resistance area. You can see my explanation from my previous videos. I only use the candle. So this these are my support and resistance area. The market is currently right here, so it's still within these black lines. It's still within this support resistance area. But from this analysis, that the market is starting to create a bearish trend line. So lower low and lower high. So that is from the monthly time frame. Then, as I said previously, we moved on to the daily time frame. From the daily time frame, I also mark the support resistance area like this, but I use the saddle brown color for this one. So we are right now on a daily time frame. Okay, this one is on the monthly time frame. Now we are on the daily time frame. I think yep, we are on the daily time frame right now. Same rules apply. Marking the support resistance area, and only use the candles like this one, just like this. Mark the highs and the lows, the open and the close of these candles. So okay, let's see where else. I think this one. Okay, if you can see that this the schematic from the daily time frame, as you can see that the market went down from here to here. Sorry, I don't think you can see it. The market went down from here to here. I will give blue lines. Okay, medium blue. Okay, the market went down from this highs to this low, and then it bounces up from that low to these highs. Then it moves sideways, and then it went further down here before it went up again here, creating this pattern. this accumulation, then it went up there. Okay, let's just say it went up here and then it bounced back down from here to here, and then it went up right there. So if you draw Fibonacci lines from here to here, you can see that this market, the market already retested the 78.6 Fibonacci area, which is actually at the strong resistance right here. And I also have the 70.2 is actually one of my golden zone, because it's right in between 61.8 to 78.6 area. So just remove this Fibonacci. So I think you can see it properly. This one is the accumulation process. It already retested here, but it hasn't retested this candle, if I'm not mistaken. Let me check. Okay, this one is the last bullish candle before bearish trend. So it's already retested it, slightly retested it. You can see right here, it's already retested that candle, the resistance. So once it is retested, I'm pretty sure that it will go down. But as you can see, as I said previously, that I trade mostly on the 1 hour time frame, so I need to check whether this one is already retested the 50% of the Fibonacci area. This one is the last candle, but it went up right here from the bullish side until before it went down. So the 50% is supposed to be right here, that one. So it hasn't retested that one. Okay, it hasn't retested this 50% of the last bullish candle. Sorry, it should be this one. So it hasn't retested that area, but it already shows that it went down. But as I mentioned before, I trade on the 1 hour time frame. So let's move on to the 1 hour time frame, and let's see what do we have here on the 1 hour time frame. Okay, it's just I just need to delete this. Okay, this one is from the 1 hour time frame. As you can see that the market already showing a lower high and lower low right here. Market closes right here. So the point of interest from the 1 hour time frame or the 4 hour time frame is this area. So okay, this one is on the daily time frame. 1828 is a strong support before the market can bounce back up. If you want to trade on the daily time frame, you can just place yourself at the 1828. This one is straight right this one. This one is the POI, point of interest, that you need to understand. We will discuss about point of interest and institutional candle on my next videos. So just make sure that you like my videos and then you subscribe to this channel. We will learn a lot of things about trading. Okay, so this one is the POI, these areas. This one is the POI, meaning that most likely the market will retest this area before going back up, especially retest this 1828 area. Okay, 1828 until 18 let's see, 1832. So it's pretty wide area, but you can place it there if you'd like to trade on the 1 hour time frame. If you trade on the 5 minute time frame, then you can see that the market most likely will go up first to retest these areas, this area. I'll change the color to uh, I'll change the color to navy blue. Okay, this area is very strong resistance because the market is currently below the area. Yep, and most likely that it will also retest this area because this is the institutional candle. This is the last bullish area before the strong bearish movement. So yeah, most likely the market will go up again to retest the 1851 to 1855 before it went down again to retest the 1828 if you trade on the 5 minute time frame. But as I said previously, I trade on the 1 hourly time frame, so I don't use this because I trade on the 1 hourly time frame. I use the loss analysis on the daily time frame, that the market still needs to reach the 1884 area, still need to retest this area, or even to retest the 1906. Okay, so what I will do is that, as you can see, these are the support and resistance area on the 1 hour time frame. You can see it properly. Same rules. Mark the higher, the top and the bottom of the peak and the bottom of the candles of the pattern. You can see that this goes up and down, up and down, up and down. Just mark those areas. Okay, so as you can see that this one right here is a very strong support, but this one is all on the 1 hour time frame. So for me, the stronger support and resistance is the 1866 and 1828. So these are the stronger areas of support and resistance. Okay, so what I will do in terms of like this is that I will need to see the pivot line, because I trade now mostly the final decision is based on the pivot line. As I said, I trade on the 1 hour time frame, so I use the pivot line from the daily time frame. Once I found the pivot line from the daily time frame, I trade on the pivot line. For example, if I check on the daily time frame, I see the pivot line, it should be higher than the current market position, so I need to buy. And up to the pivot line, I use aggressive trading strategy. It means that even though I still believe that the market will retest this lower blue box area, especially 1828 up to 1832 area, I will still buy because the pivot line is above here, and then I mitigate at the 1832. My second mitigation will be on the at the 1828 or the 1823. So I always have plan A up to plan D for mitigation. Plan A is the original trade, B up to D is the mitigation plan. So I always use those my trading plan, my trading I use my trading analysis, the manual analysis, and I never be afraid of getting caught at the wrong side of the market, because the mitigation always put me it always put me in the right in a profitable position. So I always mitigate with higher lot, and then I always close with more profits, if even if I was caught in the wrong side of the market. So That's how I made 12,000 profits, around 12 to 14,000 profits. Last week I will post the profit by the end of the video, these videos. Okay, so if you can see that the market is currently making this pattern uh, on the 1 hour time frame, this one will be the point of interest, that the market will retest this area before it went up again. So uh, if you want to buy the market, if you want to be safe, you want to play safe, to buy the market, to open buy trades, buy position on the 1 hour time frame, all you need to do is to wait for the market to reach this blue box area, this light blue box area. All you need to do is to wait for the market to reach this area, then you buy. And the take profit area around this area, around this 1843, around this area. So you can buy the market and put your take profits right here. The first take profit is 1841, the second take profit is the 1843, then the third take profit is the 1846. So this one is the safest one. The safest one is the 1841. Why? Because this one is what you need to understand in the 1 hour time frame. I'm sorry, in multiple time frame analysis, is that let me just put an ellipse here. Okay, this one is the 1841. You can see that there is a wick right here. There is a wick right here. This wick, this long wick on the 1 hour time frame will look different on the 5 minutes time frame. As you can see that there will be so many candlesticks on the 5 minutes time frame. Just be patient, we will be there. This one. So the long wick from the 1 hour time frame is actually a strong support from the 5 minute time frame in this case. So when the market when the market breaks down this area and then retest this light blue box area and then it went up, this will be a strong resistance. This area will be a strong resistance. So this one will be the safest take profit area if you trade on the 1 hour time frame. So hope you understand that clearly. So that is why this the lower part of the wick is the first take profit. Just play it safe, then you will always make profit in trading. Okay, that's what you need to understand. That's why I use the super resistance at the close and open of a candle, the top and lower part of the pattern. But I use the candle, the open and the close of the candle instead of the wick. But I always use the take profit at the wick. I always place my take profit at the wick. Okay, so that's the first take profit. If you want to play it conservatively, safely, just wait for the market to retest this area and then take profit here. But if you like my trading style, you want to copy my trading style, it will be actually a slightly aggressive trading style. I won't say that it is actually aggressive, because I have a certain trading plan that I always stick and discipline myself to it. So I never and I have no doubt that I will always end up in profit. uh, when the market opens tomorrow morning, I will place my buy position to the pivot line and then sell from that pivot line up to this area, down to this area. I'm sorry, down to this area. I will retest this area. I will take the I will place my take profit at the 1832 or 1833. That's the safest area from the pivot line. I haven't drawn the pivot line. That will be for tomorrow morning's trading plan. Okay, so that's the multiple time frame analysis. I always use the rules of 30. I will explain further for the rules of 30 on my next videos. But for now, this is what I do to wrap it up. This is what I do to mark the support and resistance area. People might say it's supply and demand or key level areas. I always say I will just mark the support resistance area. On the monthly time frame, I use black lines. On the daily time frame, I use the brown, the saddle brown lines, and then the 1 hour time frame, I use these blue dotted lines. Okay, so I use those time frames to analyze and to place my trade properly. Uh, Actually, if you use my trading style, you can place yourself at any point of the resistance, at any point of the market, but you still need the accuracy. That's why I always I always combine the multiple time frame analysis with the Wyckoff schematic and also the pivot support resistance areas and also the uh, pivot lines. That way I know, and the accuracy of my trading plan uh, is good. That's why I always uh, the first plan, the plan A is the most accurate right now, and the uh, plan B is also for the mitigation. And I rarely reach plan C. Actually, plan C only works once in a month, once or two times in a month. So plan A and plan B always works because of the multiple time frame analysis with the combination of the Wyckoff schematic and also the support resistance area, so that I will know, and also the pivot lines, so that I will know when to enter the market and when not to. Just need to practice also your patience in trading. Okay, so from 1 hour time frame analysis, most likely that the market will reach this 1828. So but there will be a pivot line up here somewhere around here, most likely around the 1853. So there will be a pivot line there tomorrow morning for tomorrow morning's trading plan. So I will buy the market to the pivot line, and then I will sell from the pivot line to this area. But if what if the plan failed? If the plan fails, I always prepare the plan B and plan C and plan D for the mitigation. Plan B will be right here, plan C will be right here, and plan D will be right here. So yeah, as long as I keep myself strict to the plan and discipline myself to follow the trading plan, I will always end up in profit. So you can always also end up in profit. Don't be afraid because you still have the plan E. Plan E will be to save your account. That will be the 50% of the 50% rules. If my floating equity, sorry, if my floating balance is 50%, then I will close them manually. It's the mental stop loss. I can always restart from the 50% of my equity. So yes, stick to the trading plan, practice to it, and you will be safe. So I think that's it for the multiple time frame analysis for now. If you have any questions, just write down in the comment section. Then I will try to explain it, to answer it within the comment, or I will create a special videos for you to learn more about how I trade the market. So I think that's it. Then I'll see you guys next time. I'll see you tomorrow morning. See you.